Ladies and gentlemen, whichever way you look at the Bitcoin charts right now, we are in the final phase of the 4-year cycle. If the cycle plays out and we see the cyclical top in October, this is the final phase because we only have 2 months until that deadline. And if the cycle breaks and we see an extension into 2026, this is the final phase of the cycle because the cycle will be ending in about 2 months, or at least proven invalid in about 2 months. So whatever way you look at it, if you're bullish on the 4-year cycle, you think the 4-year cycle will play out, if you think the 4-year cycle will break, this is the final phase regardless. And with that being the final phase, it holds a lot of weight. The next move to the upside we see on Bitcoin could be the last move to the upside of this bull market and a valid cyclical top, or it could be just another macro move in the path forward of many macro moves to come, and an extension or break of the 4-year cycle could come. So at this point, with 2 months remaining in the regular Bitcoin cycle, we need guidance. We need charts to show us the way. We can't just be relying on the date range trend anymore. The date range trend is excellent because it tells us where a cyclical top on a regular cycle, a regular basis would happen. But the problem with date range trends is they don't really give us much price chart clarity. If the 4-year cycle is proven wrong, we can't just be selling blindly in October. We need to be waiting for an actual breakdown in October to validate that cyclical top. If we keep running past October and into 2024, all of a sudden the cycle loses its value to us and we need to be looking at other things. So let's prepare those other things before that occurs. What other charts can we look at? Well, a lot of people seem to think that we can look at the Global Liquidity Index in relation to Bitcoin. There's a clear trend here. The Global Liquidity Index goes upwards when Bitcoin goes upwards. It stagnates when Bitcoin goes downwards. This has been the case since the origin of Bitcoin price action. And actually on a local time frame, a lot of people are seeming to believe as well that the Global Liquidity Index seems to be front-running the Bitcoin price action. If you look at it from a surface level, that seems to make sense. Global Liquidity Index bottomed out a few months before Bitcoin did. It topped out here a few months before Bitcoin did. Okay, rounded out when Bitcoin did. Flattened out when Bitcoin did. It seems to be mirroring and even front-running Bitcoin's price action. But this chart is not functionally useful. And I'll explain why in this video. There's a big difference between charts that are functional and charts that are valid. This chart is valid. It's a valid chart. There's clearly a correlation here, but it has no utility to us in this cycle in relation to the Bitcoin 4-year cycle top. And even if we break the 4-year cycle top, it still has no functional value to us. We're going to look into every single specific data point in this alleged trend and tell you why. And then I'm going to offer you an alternative, right? If that's not good for guiding us, what is? Well, charts like the 1-month chart RSI, and charts like the 2-week chart RSI are actually charts that are functional. They're useful to us. They show us when a Bitcoin macro move will begin, and they show us potentially where a Bitcoin macro top will be. It's a reactive indicator, not a predictive indicator, right? People are relying too much on indicators that seem to offer predictive value. The number one rule of this cycle so far has been reacting matters more than predicting. All predictions you could have made about this cycle, aside from basically an October top, basically everything else you could have made about this cycle in 2022 has been proven wrong. The people who have succeeded are the people who outline scenarios and react to levels breaking. That's what we're going to do in this video. I'm going to offer you functional trends that you can use, functional charts you can use, and I'm going to start by debunking the chart that seems incredibly useful on the surface but actually offers us nothing. Bitunix is a global non-KYC exchange, which is very rare these days. It's very rare that you find an exchange that can be signed up to and used from anywhere in the world with no location-based restrictions. It's a major exchange. It's got everything you would expect on a major exchange. Hundreds of trading pairs, low trading fees. It's never been hacked before. And with my referral link down below, you can get a 15% trading fee discount attached to your Bitunix account for life. Literally just sign up with that link, help out the channel, help out yourself by getting that discount link and getting on a great exchange. Thanks guys, let's get into the content. The Global Liquidity Index, which you can see on the screen in blue here, overlaid on top of the Bitcoin chart, is a chart that essentially measures the value of every single liquid dollar in existence globally, okay? And obviously, for that reason, it's not necessarily the most accurate thing, but you can get pretty good ideas of the trends here using this chart. Currently, the Global Liquidity Index is valued at about $113 trillion, which simply means about $113 trillion is in circulation globally, liquid. Now, what you'll notice just by simply gazing your eyes over this chart is that generally speaking, there is a pretty intense correlation between Bitcoin and the Global Liquidity Index. The same thing can be said, by the way, if you overlaid the global liquidity index on traditional market charts. Just assets in general, of course, are going to be rising when more money is flowing into global economies. So what's notable about this is that, generally speaking, around the time Bitcoin sees its 4-year cycle bull market, we see the global liquidity index start to spike upwards quite rapidly. It happened here in 2017 on 2 occasions where I've marked in pink. It happened in 2021 after the COVID drop. You can see the kind of rate of increase in that global liquidity index spiking significantly faster to the upside than it was prior to this specific point that I'm marking out in each cycle. That point that I'm marking out in each cycle only really started in this cycle in January or December last year, which is significantly later than where it started relevant to the cyclical top in prior cycles. So what we're seeing now is kind of a delay in the spike in the global liquidity index, which could explain a couple of things. Maybe that's a reason why Bitcoin has seen such a strange bull market so far, in that we've seen these long drawn out consolidations between moves, which is not very typical of Bitcoin. Bitcoin, historically speaking, has had very sharp and aggressive bull markets. This one has been more of a step up and then consolidate, step up and then consolidate kind of structure. That could be a reason. It's kind of irrelevant whether it is or not, because we do know for a fact that even though Bitcoin has such a structured 4-year cycle, which is very valid at this point, abnormality is kind of the norm. Okay, no single cycle has been the same structurally. 2017 was straight upwards exponentially. 2021, we had the big mid-cycle drop, and this cycle so far has been strange because altcoins haven't run much, probably due to the fact that Bitcoin has been quite boring on many occasions, consolidating for a long period of time, which drains the hype out of the altcoin market. So neither of these 3 cycles, none of these 3 cycles have been particularly similar in terms of structure. The only similarity really is that we top out at the same cyclical length and we bottom out at the same cyclical length, and that's all the cycle really is. So abnormality is the norm. And so looking for reasons as to why Bitcoin's behaved this way is kind of irrelevant. What is relevant, though, is the global liquidity index, because obviously there is a trend here. Obviously, when this spikes upwards, Bitcoin spiking upwards is not a coincidence. It's happened multiple times. And when this slows down, by the way, it never really goes down, just due to the nature of how money flows globally and how money is created globally, fiat currency. But when it slows down, we also are generally seeing Bitcoin bear markets, right? So this is in tune with the cycle. The cycle really, if we're getting down to it, is just Bitcoin and cryptocurrency's own kind of display of macro trends that have already existed historically for decades. So the 4-year cycle itself is not random. It didn't come from nowhere. It actually is just a reflection of traditional market trends that already existed due to macroeconomic trends. But I'm probably losing you in a tornado of word salad there, so let's move on. So given the fact that we do have this macro correlation with Bitcoin moving upwards when the global liquidity index does so, it stands to reason that if we zoomed in, we could probably see some similar trends, and we do see similar trends. In fact, what we see is that the global liquidity index tends to front-run Bitcoin's moves, and it's been doing so since 2022. And we're going to measure this out now and be very specific. Before we do so, let's just get an idea of what's going on here. For example, global liquidity index went downwards and formed a bottom. Bitcoin very shortly after formed a bottom. Global liquidity index formed a top and consolidated for months on end. Bitcoin very shortly after did the same thing. And this trend continues throughout time all the way up until right now. The global liquidity index has been front-running Bitcoin price action on a macro scale and on a range-bound scale for the last 3 years. And we need to get a good sample of that. Let's see what exactly that front running is, how long that front running exactly lasts, and perhaps we can get an idea of when Bitcoin will move next. So from when the global liquidity index bottomed to when Bitcoin bottomed in 2022, that's about 45 days. So we'll type that number there, 45-day front run. From when Bitcoin topped out in this local range to when the global liquidity index did the same thing, we're looking at a front run of about 19 days on that occasion. Bitcoin then actually ran past the global liquidity index, and we see Bitcoin breaking upwards about 65 days before the global liquidity index did. And I'm just going to carry on doing this by myself so you don't have to watch it, and then we'll get to the conclusion. So these are the data points from Bitcoin tops to global liquidity index tops and measuring the difference between, and adding some data points on Bitcoin bottoms in relation to global liquidity index bottoms, and the days in between. So when we see a negative number, that represents Bitcoin front-running the global liquidity index, and we see a positive number that represents the global liquidity index front-running Bitcoin. We have a total here on the last 3 years of about 7 data points that I would consider to be clear cut and hence usable. Some of them do exist. There's other data points that do exist, but I don't think they're valid. They're pretty messy, and you're stretching quite a bit to use them. And what we see is basically 5 times out of the 7 data points here, the global liquidity index front-running Bitcoin, 2 times Bitcoin front-running the global liquidity index. Overall, it's all happening roughly of an average of 2 months either side. I don't see clear enough data here to say definitively that Bitcoin is being led by the global liquidity index with a 2-month lead. A lot of people are saying that right now. A lot of people are saying that the global liquidity index seems to be front-running Bitcoin by 2 months. That's not a clear trend. You can see the data here is very rough. It's very all over the place. And 7 data points total with 5 indicating one thing and 2 indicating the other is not significant enough for me to think that there is any trend here that we can actually identify. The only trend is the global liquidity index and Bitcoin seem to have some sort of short-term correlation. That's it. That's all we have. And this is validated, by the way, by looking at the macro. A lot of people, again, are repeating this kind of saying at this point, which is, I don't even think they've actually looked at the data themselves, that the global liquidity index is leading Bitcoin by 2 months, right? It's front-running Bitcoin by 2 months, and therefore we can look at the global liquidity index to predict Bitcoin price action and what Bitcoin will be doing in 2 months. I don't think that's true. Because if we look historically speaking, actually, what we see is that Bitcoin has front-run the global liquidity index top on all macro top occasions. Bitcoin topped out first by a significant amount in 2013. Bitcoin topped out first by a significant amount in 2017. Bitcoin topped out first by a significant amount in 2021. That's 3 data points there. There's no reason to believe that Bitcoin won't top out first this time too. And if you're trusting this alleged trend, which is that the global liquidity index is front-running Bitcoin by 2 months, you could be led astray, and you could be led holding your bags for much longer than you should be, when historically speaking, actually it's Bitcoin that's front-running the global liquidity index on a macro scale. So don't be fooled by this alleged trend that by people bring up. There's no trend here that is usable, at least on a shorter term level. The only trend is there is some vague loose correlation that bounces around between Bitcoin leading and the global liquidity index leading. And the fact that the global liquidity index is going upwards is probably a good thing for Bitcoin. That's all we can say. So I know I entered this video with, a kind of promise of bringing you usable data for guidance. We're not going to find that, actually, I don't think, in the global liquidity index. All we're finding in the global liquidity index is room for doubt, because the only thing that we've seen on the global liquidity index that is different this cycle than last cycle is it spiking to the upside later. And that could be an indication that perhaps the cycle will extend. But that's not usable data. That theory, what I just mentioned, isn't usable, because the trend is your friend until it ends. We should be trusting the cycle until it's proven to be broken. We shouldn't be relying on speculation like that. That's not data. That's speculation. Now, what is usable data? Usable data is something like this. It's the 2-week chart RSI. The 2-week chart RSI, forget the cycle, forget the 4-year cycle. This is pretty much an independent thing at this point in terms of where macro tops have been marked. And the reason I can say that is because we've actually seen tops be marked outside of the cycle from this 2-week chart trend. Most macro tops that Bitcoin sees is marked as resistance by this single linear simplistic line on the 2-week chart. The most recent being in February 2024, completely outside of the 4-year cycle. We are now seeing a triangle formation penting up on this 2-week chart, showing us that another move is coming, whether it be an upside move or a downside move. I think it will be an upside move. When this 2-week chart triangle breaks to the upside, that will be confirmation of the upside move, and we'll be looking very, very closely at this level for resistance. If we see resistance there, if Bitcoin starts faltering there, that will be a sign to get the hell out of the market. If Bitcoin looks strong going into that resistance, that will be a sign to keep holding on. Because remember, we cannot blindly sell just because the cycle or something akin to the cycle says so. Even though we trust the cycle, that is not a reason to just blindly sell when the cycle says the top might be in. For a couple of reasons. Reason one is the cycle is not exact. The cycle is a vague deadline, okay? It could be around October, could be in late September, could be in early November. We don't know exactly when the top will be. And if you blindly sell, you could be blindly selling too early or potentially too late. So you need to react to the data with the cycle in mind, not react to the cycle itself. Going further into RSI trends that are useful, we can just switch to a different time frame. We can look at the monthly chart RSI, and we immediately see a very similar line, this time one that has been very well connected to cyclical tops and bottoms, which again clearly identifies major macro resistance at the top of this channel here. If we come up and we test that macro resistance, that would be a time which you'd be getting cautious and you'd be watching closely for breakdowns. This is data that we can use. The alleged 2-month delayed chart from the Global Liquidity Index is not actually usable data. Unfortunately, it's not. Yes, there are correlations there, but they're not exact enough. They haven't formed exact enough trends for us to actually find them useful in relation to the cyclical top, or even an extension of that cyclical top. So use data that makes sense. Use data that is functional. There is a big difference between data that is valid and data that is functional, especially in relation to a cyclical deadline. To bring it back and wrap it up with the levels that matter on Bitcoin, as we've done many, many times, it's clear that Bitcoin has massive support at 109,000. As long as we're above 109,000, everything looks pretty much the same. We are in a macro upwards trend, we're consolidating, we're waiting for the next move. If we lose 109, that's when our eyebrows start to get raised. As long as Bitcoin is below about 125,000, we are not in an active breakout. We are in a consolidation above support, okay? That $125,000 level is coming from the Bitcoin power law chart for one. It's coming for two from the logarithmic regression channel on Bitcoin, clearly marking a $125,000 roughly resistance level. Until one of these levels breaks at 109 to 125, nothing has changed. As I've mentioned a few times, my fear at this point is not that we might be entering a bear market. My fear at this point is that Bitcoin might see an underwhelming top. We might see a top at this channel, which would be at 130K in October, at the power law chart, which will be again at 130K in October. That will be quite underwhelming for Bitcoin. We'd probably see a significant Ethereum move, maybe some altcoin strength, but nothing as big as what we've seen in price cycles. That's my fear right now. We need Bitcoin for that reason to get a move on as soon as possible, to leave it as much time as possible to run upwards and give it as much of a chance as possible to break these macro levels. And that could potentially lead to a much higher top within the 4-year cycle, or even potentially an extension of the 4-year cycle. These are all things that we'll have to react to as time goes on. Do not fall into the trap of thinking predictions matter. Do not fall into the trap of thinking that you can predict Bitcoin price action based on a 2-month trend that a YouTuber is talking about with the Global Liquidity Index front-running the Bitcoin chart. It's an example. Predictions in this cycle do not matter. This cycle has been, since 2023, since the first sign of deviations with altcoins, this cycle has always been about reactions rather than predictions. Watch the levels that are important and react to them when they break. When 125 breaks, you react. When 109 breaks, you react. You do not predict. Predicting is a silly game in this cycle. You make money in the market by buying and selling. You don't make money in the market by saying Bitcoin's going to go to X level. That makes you no money. Words mean nothing. Actions mean everything. You look at the 1-month chart RSI and you react when we get to resistance. You react when we get to support. You don't predict that we're going to resistance or support next. What is the value in that? There's no value in that. It's just cope. It just makes you feel good. Now, for the record, I think we're going to go upwards here. I think Bitcoin is still in a bull market. I think we will at least, as I said, at least go to 130,000 in at least October. I think there's a relatively solid chance that we extend beyond 130,000. I think there's a chance we extend beyond this cycle, right? I'm bullish, but I'm not stupid. These words mean nothing. What matters is how we react to the levels as they come. That's what I'm really trying to hammer into you guys on this YouTube channel over the last couple of weeks. And I hope you're getting the message. Thanks for watching, guys. Hope you enjoyed. Please check out the Bitunix Exchange. It's global. It's non-KYC. You can sign up from anywhere in the world. You do not need a VPN. None of that. It's very low in trading fees. And with my referral link down below, you can get a further 15% trading fee discount attached to your account permanently. So go ahead and use that link to sign up. I appreciate it. Check it out. Thanks, guys.